But gold is the real ultimate money, and it is the most liquid asset on planet Earth, in my opinion.
I agree with that, but I also think that before you start buying ounces of gold, that you need to have a good foundation of food preps, water preps, security. Gold and silver have a major role, but you need to get some of the foundational items checked off your list, in my opinion.
It's a absolutely stunning day here today in the desert. It is Sunday, May 22nd, 2022. I'm here with my good friend Matt today. We were just talking this weekend, and this video today may be a two-part series because there's so much going on, so much to talk about. Matt wanted to come on today, talk about a bunch of things, nothing in order. We may be all over the place, but this is so very, very important. And as it is Sunday, as we're heading in to the markets opening tomorrow morning, futures opening this evening, it could be an absolutely volatile week yet again. And I think we're going to continue to see lower highs and lower lows. And before we go any farther into this video, there was somebody that made a comment a couple days ago, and I want to just repeat this comment. He said this: gold is the money of kings, silver is the money of merchants, barter is the money of peasants, and debt is the money of slaves. And I wanted to bring Matt on today. He's a smart guy, successful guy, and just pick his brain a little bit about the real estate market, gold and silver market, stock market, bond market, all of that. And feel free to comment down below about what you're seeing, what you're hearing, and what you're witnessing right now in this economy. But Matt, great to have you on today. When it comes to money, what is your opinion on gold?
Good to see you, JB.
Good to see you.
You know, I'm a big proponent of gold, but more importantly, physical gold. Because I think holding physical gold and silver in your possession, you know, there's no counterparty risk. And we've seen what's happening in the last few weeks, even since Vegas, right? The markets have had a precipitous decline, and those people have counterparty risk. And the ones that are sitting on physical metals don't have to look to a third party. They have it, they own it, and it's been holding up pretty well, JB.
And when you talk about risk, I think we're in a period of time now where you do not want to be taking risk. You don't want to be speculating. I think this is the time right now to be stacking cash, to be buying gold, to be buying silver. What's your opinion on cash right now?
Look, I mean, you know, cash still has a place. Cash is still king. I think eventually cash is going to become worthless. The dollar is going to keep getting devalued. Right now, it does have a place. I believe in holding some cash for emergencies, some small denomination cash. We haven't yet seen the shift to a major collapse in the dollar, but I think that will eventually unfold. You're just seeing too much transition away from the dollar worldwide.
Yeah, I think this is a time where you need to have both, because today, you might need cash, and tomorrow cash could be worthless, then you need gold, right?
Yes.
Right now, we could see gold go down further and the dollar spike up, and you may need dollars. So I think right now it's about diversification into having gold and silver and cash. And if you have acreage, if you have paid for real estate, Matt, you believe in even luxury watches as other types of assets. We just saw a Mercedes-Benz sell for $142 million over the weekend. So people are running to other type of assets such as luxury watches, collectible cars, collectible art, things like that.
You are. There's been a little bit of a decline in luxury watches lately. What I'm seeing and what I'm reading is there's a little bit of a liquidity crunch. As liquidity dries up, some of those high-end timepieces may not be able to be sold off as quickly, whereas you go into any coin store, any pawn shop with an ounce of gold or a couple of silver coins, and you can immediately transfer that to liquid.
And see, a lot of people, you know, they'll go, well, you can't eat your gold, you can't eat your silver, but they don't read history, and they don't know throughout thousands of years that people were able to sell gold or silver for currency, or a farmer. Many farmers will take a physical ounce of gold or silver for vegetables and fruits. And so they don't seem to understand the barterability of even gold and silver and how liquid these assets really are. Gold and silver are probably the two most liquid assets on planet Earth. You could go anywhere in the world and sell them for any currency and walk into a grocery store, walk in, get a haircut, walk in and purchase another type of asset because they're so liquid that you could go anywhere and sell them for a currency. And of course, you have people in Venezuela actually shaving gold into grams so that they can go grocery store shopping, they can get haircuts, they can pay their bills. But gold is the real ultimate money, and it is the most liquid asset on planet Earth, in my opinion.
I agree with that, but I also think that before you start buying ounces of gold, that you need to have a good foundation of food preps, water preps, security. Gold and silver have a major role, but you need to get some of the foundational items checked off your list, in my opinion, before you, or concurrently with allocating, money into precious metals.
Correct, and I think you would agree. Security is the utmost #1 asset you can have, because if you cannot protect gold, silver, your food, your water, your family, somebody will just take it. And we always say if you don't hold it, you don't own it. Well, you're not holding it if you can't protect it.
I agree with that.
Now I want to switch gears a little bit. Let's talk about a few other things here. Real estate. What's your outlook? We're hearing so much about real estate, and now it's every day. People are aware that we are in a huge housing bubble, that we're going to see a turn in inventory as new homes. I think we have about 1.8 million homes under construction right now. We have people defaulting on properties. We have landlords trying to get tenants out so they can sell property. So we're going to see a huge uptick in inventory. What is your outlook in the housing market this summer heading into fall?
Well, what caught my attention last week was the home builder sentiment has tanked. I have a lot of builder friends that are sharing that sentiment. The confidence is not there as it was, so it's going to start with that. But I think this is going to play into, in the sentiment now going forward, is that's going to be the next shoe to drop. The market's taking a big hit. The stock market, crypto market's taking a huge hit. And I think the next shoe to drop is probably going to be the housing market. As you see rates continue to rise, buying a home is going to become less attractive, or maybe less attainable for many people. They just won't be able to afford that payment. And that's assuming they go into a traditional type mortgage.
Right.
You could try to leverage into an adjustable rate mortgage, keep your payment down, and that's going to mean more pain in the future.
Right.
So I think that there's going to be a huge impact on the housing market as we go forward.
Now, in our area here, we have a lot of tourism in the Palm Springs area. And over the years, I know a lot of people that bought homes in the Palm Springs area for one reason and one reason only, because they were going to rent that home out on Airbnb. That these were going to be Airbnb investments, and now we're seeing huge tourism trouble. I mean, just to fly to Alabama was nearly $1,000 round trip. And so now the price of an airline ticket, the price of a gallon of gasoline to even just take a family trip somewhere is going to price many people out, many families out. And I think this is going to have a huge recourse with the Airbnb rentals. And what does this mean for the Airbnb investor who already overpaid for the property, and now the renter doesn't show up for the weekend or the week or the month? What happens to this side of the industry?
It goes down because these investors rely on cash flow to cover the debt service, the mortgage, the taxes, the insurance, the upkeep, the cleaning costs, the supplies, the towels, chlorine for the pool, all that kind of stuff. You're seeing the cost of those items rising substantially, which is also bringing further pressure. And some of the investors that have paid cash, they still have all those expenses. They still have to, stock the house. They still have to clean the house. They still have to pay the taxes, the insurance. So I think that's going to be a lot of people are going to find themselves having to abandon those homes.
And a lot of these people may have been heavily invested in the crypto market, in the stock market, completely annihilated now, and going to have to raise capital. And probably the first thing to go is going to be the second, third, fourth home, the investment property, so on.
Those always go first, right?
Right.
Yeah.
With the boats, the RVs, the motorcycles, etc.
Well, and as gas continues to approach $7 a gallon, I saw something in LA, gas at some of the stations now is in the $8 range.
Well, right across the street from where we're at, gas is $6.69. I can attest to that because I was there yesterday, literally right across the street from where we're shooting this video. But I want to switch gears again here. A article on Market Watch last night. Growth scare strikes U.S. stocks as estimated $5 to $8 trillion of household wealth evaporates in 5 months. What is your comment on this? I don't think people quite understand how severe this market crisis is right now and how much wealth has already been erased.
These are the people that create jobs. You have it from the top down. This is people that have made a bunch of money in crypto, a bunch of money in the stock market as the money printing continued for the last 2 years, and that now is taken off the balance sheet. And these same people can't afford to hire. They can't afford to go out and contribute to productivity and buy.
Right. But you have household wealth in there too. So the average Joe, his 401k has taken a massive haircut. Their stock portfolio, maybe the average guy making $40,000, $50,000, $60,000 a year. I mean, these are huge, huge hits. And now we have another hit that's about to hit the economy, and that is going to be the housing market. How many trillions of dollars of wealth will be evaporated from this economy once the housing market goes, and how connected is the stock market and the housing market? So we had how many, millions of people borrowed money out of their homes, did cash out refis, and went into the crypto market, went into the stock market by using their home as an ATM, and went into these very, very risky markets. And now, as equity, we're going to begin to see equity decline and be vacuumed up out of this housing market. And there's a term people don't remember or never heard of. It's called being upside down.
Yeah, right.
Can you elaborate a little bit on upside down, because you saw the whole housing crisis out here in 2008. You knew a lot of people who were upside down, short sales, defaults, all that. Will we see that again?
I think so. We're heading into that again. The values have been high. For example, I know in the last couple of weeks in my area here, I've seen some escrow closings in the stratosphere in terms of dollars per square foot. Those people are still buying at potentially the height of the market. Same as if you're buying Bitcoin at $70,000, $68,000. Look at where you're at now.
Right.
It's the same analogy. This is going to come down. When we say underwater, we mean that the debt you owe on the property exceeds the fair market value. And in 2008, a lot of properties were worth substantially less than people's loans. And at that point in time, people make a decision. Does it make sense to keep servicing this debt in hopes it's going to come back or walk away?
And the big problem here is going to be the cash out refis on top of that. Yeah. So that if somebody loses equity on their home, that's bad enough. But when you borrowed $100,000, $200,000, $300,000 out of your house on top of that home losing equity, you're on the Titanic. There is no exits. You're not getting out.
Especially if you put that money into Bitcoin or NFTs, something like that,
right,
that have lost value.
Yeah, so you could have lost 50, 60, or all of it at this point, and that.
But you still have to service that debt.
Right, the debt is not going away. So that's going to be a big, big problem for people who just, went into these markets like it was Las Vegas and doubled down, and they're going to learn a very, very valuable lesson, a costly one that they may never recover from. Another article today on CNBC, Americans now have an average of $9,000 less in savings than they did last year. I think that this is a really conservative number. I think it's probably much higher than that. But think about last year when everybody was getting benefit checks of $600 a week, stimulus checks, child tax credits, unemployment. So people were cash deep. So now this year it's $9,000 less. What's it going to look like next year?
Well, a loaf of bread costs a lot more than it did last year also. Right. Meat costs more. Gasoline costs more. So not only did the free money dry up, but everybody is paying more for those basic items they require every day to live and function.
Right. And we're kind of like back where we were in 2019. 6 in 10 Americans don't have $500 saved up. 70% live paycheck to paycheck. 56% of Americans, the wealthiest nation on planet Earth, as we're being told, also the biggest debtor nation, 56% of Americans cannot cover a $1,000 emergency. 25% of this country has no money, zero saved up, zero. And I believe things are about to get much worse because, yes, $6 gas, and they're saying that the national average this August, JP Morgan believes that a gallon of gas national figure will be $6.20. That'll be $8 plus, probably $8.50 here in California. I think that's catastrophic. I think that would just seize up the economy. How many people just wouldn't go to work? They couldn't afford to go to work here in California at $8.50 a gallon.
Yeah, and what's diesel at right now? I saw something a few days ago about the farmers that rely on the diesel fuel. The truckers rely on the diesel fuel. 10 freeway runs through here. You know, all these truckers are having to fill these tanks to get from the ports, you know, beyond the borders into Arizona.
Right. And
so how are they going to keep affording that? The independent contractors have to pay for their fuel.
Right. They're in big trouble. Of course, it'll be passed on to you and I and the consumer. But we're also hearing about less shipping now, right? The truckers are complaining that they're getting less shipments, less loads. And so what does that mean? Now, we know that China's been shut down for a while, but I think we're going to see a big problem in the trucking industry. You know, over the last year, they were begging people to get into trucking, get your commercial driver's license. We need hundreds of thousands of more drivers, and they're going to get all these people into trucking like they did. And then all of a sudden, we're going to begin to see the layoffs in trucking, as we're going to see layoffs throughout the U.S. economy. As corporate America, big business, medium, small, everybody's going to have to begin to lay off because they're going to have to shrink down because the cost of fuel, the inflation, the overhead. Now we're hearing about layoffs, Matt.
Yeah, and you also factor in the unavailability of parts. Right. You know, for the trucks.
Right. Well, parts for anything. So if I can't get parts in the warehouse, I don't need as many warehouse workers, right?
Right.
We need as many delivery drivers. And so, you know, same thing with the restaurant business. If not as many people are going out to eat, I don't need as many bartenders or waitresses. So we're going to continue to see more layoffs, and this economy is really, really going to continue to seize up at a very accelerated rate. The hedge today. Cracks appear as subprime borrowers miss loan payments amid recession threats. People are falling behind on their credit cards, their automobile loans, and their personal loans. Credit card debt exploding in March had its largest increase on record at $52.4 billion. What does this bellwether tell us, Matt?
Well, it means the consumer is in bad shape. And what we haven't seen yet, and I bet it's coming, is that the credit card companies are going to start cutting people's credit lines. So let's say you have a credit line of $10,000 and you owe $9,000 or you owe $8,000 and they cut it back to what you owe.
Right.
Let's say you owe $5,000, you have a $10,000 line. Yeah. They say your line is now $5,000, and you know, so that's going to be next.
That's big trouble.
But the consumer, I think the consumer is tapped out. Where's the money coming from?
Right.
The housing piggy bank is drying up. Yep. The free money's drying up. So.
Said here 11% of credit cards with credit scores below 620 were at least 60 days delinquent, up 9.8% from a year ago. That's substantial. Personal loans had a delinquency rate of 11.3%. Car loans and car leases of subprime loans, delinquencies are up 8.8%. So we got a lot of people driving around in cars that can't afford those cars, and they probably should have never been allowed to buy those cars in the first place.
Well, for a couple of years, they were making those car payments with the free checks coming in, and taking on 6- and 7-year loans. And now the reality is those. I think the cars are starting to come back down in value, and you know there's such thing as being upside down in your vehicle too. Even worse is the scenario than the housing.
So as these people lose these cars, the repo man comes, or they just turn in the keys. We're going to see more cars on the car lots coming. And that means car prices will continue to come down. Used car prices are coming down. I'm waiting to see if we ever get chips. If the chips show up, what are they going to do? I mean, people write me all the time saying that, you know, they were in Detroit and, you know, there's 5,000 Broncos sitting on, you know, hundreds of acres of Detroit real estate. 5,000 plus Broncos just sitting there waiting for chips. Thousands upon thousands of cars, seas of cars. What happens when those chips show up? And we're flooded with new cars at the dealerships, and people's credit's destroyed. They're delinquent on personal loans, credit cards, car loans. They can't qualify for one of these cars. The economy's getting crushed. People are losing jobs. What in the world are they going to do with all these cars?
That's a good point. if people have to turn their cars back in, or if it goes to a repossession, same as a foreclosure,
Yeah.
their credit's done. It's going to go in the tank. When you have a 450 credit score, you're not going to be able to go and finance a new Bronco. So
Right.
how are they going to sell those Broncos?
And we've had millions of people evicted out of their homes, apartments. Their credit's been destroyed. And so how does this play out? And then what about the 1.8 million new homes under construction? What about the resale homes that will be coming out? Who is going to be able to qualify for all these homes?
Not a lot of people.
Not a lot of people. Another article I was reading today from CNBC, even a hot labor market, workers are worried about job security. It said here in this article, only 20% of workers feel that their job is secure, according to an ADP survey. Now, that's a concerning number. That means 80% of workers in this country are not too secure that they're going to have a job maybe next week or next month or next year. What does this tell us?
Well, I think that's well-founded, but what it says is the employers don't have the confidence to hire. And as they start, you've seen a lot of layoffs already starting to happen now.
Yeah.
So the employers just, they have the same problems. They're not going to hire. If you have a skill set that you can get yourself in a situation where you can work for yourself and you can, make your own decisions, I think that's an ideal situation. Not a lot of people can do that, but
Right.
The ones that can, it might be time to start thinking about trying to become self-sufficient.
If you could expand on that a little bit, that's a great point, because I think when you can work for yourself, there's a lot less risk of you losing a job. And if you have a skill set and you're good at something, you can make money. So if you can expand a little bit on that, please do.
Yeah, it's the same thing as having no counterparty risk holding an ounce of gold.
Mm-hmm.
If you're able to get up in the morning and generate revenues with whatever your skill set is, without having to have a boss or rely on somebody else that controls your destiny, I think that's a positive thing, especially heading into the conflagration of events that we're seeing now and going to see in the coming months and years.
Let's talk economic indicators. And we saw some this past week as Target and Walmart stocks plunged. What is this telling us, Matt? And I think I know the answer.
Well, in my mind, those are bellwether indicators. Look, we shop at those stores. For basic things.
Right.
And I think the majority of middle America relies on those kind of items. The fact that a Target and Walmart cannot generate positive earnings and positive forward guidance is not good news.
And we saw the dollar stores, a variety of the dollar stores, absolutely wrecked last week. So if people aren't shopping at Dollar Tree or Dollar General, then where are they shopping, or they're not shopping?
So I think I understand the dollar stores, their shares were down, and I believe the dollar stores' earnings are coming in this week, which means they may be pricing in what they expect to be a drop, just like Walmart and Target.
This could be a nightmare this week, because we're going to get results from Costco, Macy's, and the dollar stores, and a handful of others this week, and we could see an earnings meltdown take place. Would you care to use your crystal ball on this one? What do you foresee this week with earnings?
Boy, Costco, the prices have skyrocketed at Costco. So my gut tells me that Costco is going to be guiding lower and might miss. If the dollar stores miss earnings, if they can't generate profit on dollar items, when everything else is going up, that could be a catastrophe.
And really quick, I want to recap on what happened Friday. Dow Jones down 617 points, bounces back, comes up, and finishes positive 7 points. I think the NASDAQ, did the NASDAQ come back slightly green?
It was close.
It was close. Everything was really down.
But it was down big time early in the day.
NASDAQ was down 300 plus. I think it was either borderline or up a little bit. I can't remember. But anyways, it was a complete miracle that took place, a miracle on Wall Street on Friday. And, to me, there are so many people watching this stuff and have no idea that it's like that part in the Wizard of Oz where the wizard is behind the curtain pulling the levers and pushing the buttons, and you pull the curtain behind and you just see this little, this little man, and who really has no power, and the whole thing's a facade. And when I watch what happened on Friday, it's just another reminder of the whole facade, the whole Ponzi scheme, the whole fraud, the whole rigged system. And the scary thing is there are so many people in this rigged system believing that the Fed is going to save them, that the wizard is going to keep continuing to pull the cables and press the right buttons. But I don't think the Fed can save this at this point. And I honestly don't believe that the Fed is going to reverse course with rate hikes.
Look, my understanding is the Dow was down, although they pulled a rabbit out of a hat on Friday. It was down huge for the week. But
Yes.
My understanding is the Dow has fallen 8 consecutive weeks, which is the worst streak since
99 years.
I heard 1929.
Yeah,
Okay,
yeah.
maybe that's 99 years, but
Yeah.
it's horrible. So you have to look at the bigger picture, and the trajectory is down, it seems to me.
And this is what 0% interest rates for over a decade. This is what QE and trillions upon trillions of dollars has created. It has created a monster now that has gotten completely out of control. They have no idea now what to do. And I think the only thing they can do is get ultra aggressive with rates and get ahead of this monster, or this thing is going to continue to grow out of control. I mean, if we're only going to raise rates at 2.75% Fed's fund rate at the end of this year, or 3.25, whatever it's going to be, we're still at what, 8.3 right now. That means that we're still negative 5%. So unless we're willing to get to 9, 10, 11, 12% interest rates, and that's if you believe these official numbers of 8.3, we all know it's probably about 17% right now, which means we probably need to be at interest rates at about 20%. And people just, they have a heart attack when you say that. But if you don't get control of this right now, we're going to lose our reserve currency status. Our dollar is going to implode, and we're going to be living with hyperinflation, which to me would be worse than any type of economic collapse or depression.
Well, what you see is a continued decline of your purchasing power
Right.
with your dollars. And again, we go back full circle to gold. I mean, the idea behind holding physical precious metals is to try to stop that, try to put a hedge on that. And metals have come down too, but you have to decide in a whole sea of potential assets, where do you want to be?
Right, and I think obviously when they flood these markets at 3 o'clock in the morning with millions of ounces of gold or silver or what have you being purposely shorted,
Yeah.
Thanks to J.P. Morgan, they do not want to see any competition to the U.S. dollar. But I do believe, you have to ask yourself, why does JP Morgan have so much physical gold and so much physical silver in their vaults? Why does every central bank, why have they been stockpiling gold for so many years? Why is Russia turning to gold? Why has China turned to gold? Why have so many nations turned to gold? And why are we hearing so much about gold-backed currencies now? If it's a barbarous relic that nobody wants, I do believe that at some point, the banks could do the opposite and actually create a bubble in gold. They're not buying this stuff for their health, right? They're buying it for a reason. And what if we see a complete 180 with gold, where the banks now all of a sudden have to start pushing the price of gold up? And remember, if we run into dollar trouble, they're going right to gold. And at that point, they're going to reprice gold, and it is not going to be $1,850, $1,950, or $2,000 an ounce. It's going to be much, much higher than that. This is really the insurance policy for every central bank and most countries out there that are stockpiling gold, is gold being money and backing, at least partially backing, some currency, maybe 20, 30, 40%, backing a currency. We're hearing about the ruble, the yuan. At some point, You know, the world is going to be done with fake monopoly money, fiat currencies. The U.S. took the world off the gold standard, and I believe the world at some point will put America back on the gold standard. Matt.
Well, you buy metals, and this is my opinion, and again, we always say we're not giving any kind of financial advice. In my opinion, to preserve, to create a baseline for yourself. If there's a moonshot down the road and they overshoot on repricing the metals, that's great. But in my mind, that's not why I buy it. I know there's a lot of people that speak that. I just buy it to preserve. When everything else is going down, you hopefully have the least dirty shirt in the hamper with metals.
Right. And again, metals have a 5,000-year history. They're
True.
not going anywhere. It's God's money. And anywhere you go in the world on planet Earth, everybody can look at a piece of gold and realize that it has value, that it has worth, that it's wealth, that it's money, because it is the ultimate money, because it has the longest history of any type of money, any currency. And I mean, mentioned multiple times even in the Bible. So again, central banks and countries have not been stockpiling this asset for the last 10 years for their health. Well, in a way, they have been doing it for their health, their financial health. But think about why they're doing it. If it's such a barbarous relic that nobody wants, why won't they give Venezuela their gold back? Why won't we give Germany their gold back? Why is it so important today to own this barbarous relic if so many people say you shouldn't?
Exactly. It's the smoke and mirrors.
Right.
You know, it's always look over here, don't focus here.
Right.
But you know, do what the central banks are doing, not what they're saying.
Why does Jamie Dimon's bank, J.P. Morgan, have more above ground physical silver than anybody on planet Earth?
Right.
And they have probably more physical gold in those vaults than anybody on planet Earth too. So why does Jamie Dimon not just give those ounces up and sell those ounces to other countries or to other investors? Why does Jamie Dimon and JP Morgan keep those vaults secure with all that physical gold and silver?
Well, what's the incentive to keep the price down right now? With as many ounces as they have, you would think they would want a high price. So that leads me to believe that the incentive is so they can keep accumulating more.
Absolutely. Keep buying it, keep buying it. And of course, many of these central banks are all in alignment, working together, right? So they're all backing up the truck, buying massive amounts of gold right now. And I don't give financial advice, Matt doesn't, but I think that if you have a couple bucks laying around, it's a great time while we're seeing this pullback to buy some gold, buy some silver. I put it away. I don't even care what the prices do. I buy it. I don't care if it's going up or down. I just buy it and keep accumulating it. And I pray to God that I never, ever have to use it, because if gold goes to 5,000, 10,000, Jim Rickard says 15,000 plus, if it goes to those kind of numbers, we're living in a very, very scary place. I hope I never, ever have to sell my gold, because that means we're in a very dangerous time.
Yeah, if it goes to those kind of numbers, it could be a Mad Max type scenario.
Yep.